a lot of people have been asking or confused about what's going on with the stream. I've converted my channel that you're watching this on now is a free channel. I do, however, now I'm going to start selling my videos for a fee. I'm doing it a la carte weekly for $5.99. These videos I've kept free for the moment, but the midweek videos, the format on these are actually going to change whether or not they're live or not. They're going to start looking a little bit more like the weekend review videos with charts and such, and that will be behind the paywall, meaning not free broadcasts. There's some new software I'm going to buy to use for that, which should be quite good, actually. I'm also offering the subscription via my channel. I set up a separate YouTube channel, which is a subscription channel for $49.99, and that's a monthly billing. With that, I've for the first 2 weeks, we're now in the second week, I'm offering 2 weeks free, first of all, so you get your trial subscription or what have you. It's a bit of a way to build in a discount. They don't really have a thing for early adopters, so that's the way, the 2 weeks. And I'll send you, once you send me a screenshot of your subscription, I'll send you my setup on that I use on Thinkorswim. I have a highly customized setup. It has a value area script in there, breath bubbles, just what I use. It's not that I'm not selling that, as some kind of standalone a la carte thing. It's just, as a thank you for being an early subscriber, I'm sharing with you guys my setup for the first 2 weeks. As far as what's going on with the videos, I'm going to continue obviously with the weekend review videos. I told you about the new enhanced midweek video, and I'm also going to start doing some more special edition videos. So that's that. One thing that I've heard from a couple of people, I just want to address quickly on this. If you're a subscriber and you're having a problem logging in on mobile, log out of your YouTube account and then re-log in. I'm told that fixes the problem immediately. Also, not every country I didn't quite realize how global I was. I had people all over the world watching me. Some of them have, if you're having a problem signing up, it says your country's not available, message me, I'll try to make it available. Not every country does have that availability, so you may have to download what's known as a VPN, a virtual private network. There's a free one, Opera. It's a very legit browser, and that has a VPN mode. If you flip into that and just click the United States, you'll be able to get around the country firewall. I know that a friend of mine uses that in China, so oddly for Netflix, so I'm pretty sure it will work with this. So that's that. If you're not subscribed, I highly suggest doing so. Let's get rolling here. Talk about some of these my views on the markets here. We'll talk about some of the market keys. I actually took my weekend review video sheet with me. It got a little scrunched up in my laptop bag, but we'll go over the market keys and talk about some of the stuff you guys want to talk about. I took some notes, so I'll do my best to see my screen in the sun. As you know, it's tough to see screens in sunlight, and I didn't realize how spoiled I had gotten. I used to trade on this laptop when I had first moved to my new apartment. I didn't have a full-size screen, and now I'm back to a 13-inch screen. I traded with a 13-inch screen, believe it or not, for almost a year and a half, maybe even almost 2 years. I'm willing to say that now that I'm on like a 27-inch screen, going back to this, it's like Fisher Price. I mean, I'm like squinting in. I'm just get me out, in and out of positions. It's a big deal. So I guess I'm having big screen withdrawal. Anyhow, as far as the markets go, I in my weekend video, which I know, thank you so much, by the way, for those of you who've been subscribing, also buying the videos a la carte. Either way, I appreciate the support. I'll say this, we had some pretty big calls. I mean, those of you who thought I was going to launch the pay service without making some decent calls out of the gate really don't know me very well. We had some pretty big ones. I was talking about, in Netflix, I said I thought that the move would be up. We'll get to that, though, in a little bit, and I'll give you my updated view on where I think it's going from now. I've been, for the last 2 weeks, been mentioning Priceline and the $2,000 price target. we're almost there. We're basically there. I had put out a tweet today with a bit of an update saying that if you're in weekly options, you might want to peel those off a little bit early, because theta decay, like let's say tomorrow for some reason is down, you could blow your whole trade waiting for like the last few points in a stock like Priceline. It's sort of like a mulligan or whatever they call it in golf, where you're right by the tee, you kind of just tap it in. It's like just a given. That's where we are with that as well. Always remember that, particularly with weekly options when you have 2 days to go or whatever. I'll say this: a lot of people have the gambler type of mentality, and they want to wait and play it that way. My experience with that is sometimes it works and sometimes it doesn't, and I always try to view the market from the vantage point of the professional, and professionals usually take care of it quicker. They'll forego the last couple of dollars or the last couple of cents in a big stock like that to lock in their solid gain on a great trade. Wow, is it hot out here? Anyway, let's talk about the market keys quickly. Let me flip into those. VIX, I would imagine, believe it or not, I haven't looked at a lot of this throughout the day. I've been kind of like checking it out on my phone on the beach. One of the things I like about out here, or I should say don't like about out here, is the cell service. Although where I stay, there is fantastic cell service, and that's by no accident, I can assure you. VIX lower end of range, obviously the risk is sideways to higher with regard to that. The dollar yesterday, for the first time in a long time, I changed my view on and actually put on a long trade, long the dollar. Oh my God, what am I doing? Listen, I was bearish on the dollar at the highs. I said it was setting up for a head and shoulders. I said after the neckline snap, I projected it down. And in UUP terms, which is the one I often like to use unless you're using the futures, I had said that I thought that the price, where to get in, if you've watched my videos in the past, I've drawn lateral bars, and the range low, the old range low of 24.47 coincided with the exact measured move of the head and shoulders, and voila, we are long the dollar down there. It went about 2 cents lower. I don't know where I filled. It actually filled while I was still sleeping in pre-market. Yeah, someone just mentioned the video feed stinks. I don't have the best Wi-Fi service out here. The cell service is fantastic, but I'm trying to, the Wi-Fi here is I guess not that great. So sorry if you're suffering through bad connectivity. Also one of the reasons why I didn't charge for this video today. Okay, so we're getting the bounce in the dollar, and I guess if you'd like, you could use probably the low in the range here, this 24.47 as a 24.45 as a stop. I might give it a little bit more leeway, but not too much, because listen, we have a reference low back in, let's see, at 24.32. I think 24s are going to be key. I'll probably hold it into that range. My target in this, where I'm looking to kind of unload it if that low holds, is like 25.92 to 26. That area I think is the that's where I'd like to hold this to. Ideally, I'd probably peel half off at 25.36 though, which is the 38.2 of the range, and it's also the downtrend line. So if we were to like bounce straight from here, that area to me would be an interesting area to kind of book this bad boy. It's not a huge trade for me, but it's okay. Gold is just chillaxing here. We're still below the 50 and the 100 MA. I would say this: if you aren't in from like this recent low, which we had actually talked about potentially being a buy point there, and maybe even with a little give to a little lower, I'll say this: you could own it against the 200 MA, but I wouldn't add to the position or initiate new longs unless we clear the 50 and 100 MA, if that makes sense. Like, I wouldn't put fresh money to work here. So if you're a BTD type of guy or gal, I'm trying to get the lady, I'm going to do a ladies night one of these days. I'm trying to get my subscriber base up more with ladies. I have tons of guys. I need more ladies. It's like 80-20 or something based on my YouTube statistics. That's kind of not so good. I guess they don't like looking at my ugly mug. Anyway, if you're looking to be a BTD, I guess on a pullback to the 200, but it would have to be like so right or right out. I'm not even kidding. Or if you're already long, I would stay long with a stop below the 200 MA and then an addition above the 50 and 100 MA. That area to me would be nice, right? It would be kind of lovely. We have broken trend. It's looking a little bit better, so GLD okay. I didn't take GLD, truth be told. I did take, though, SLV on the look below and fail play. It's been kind of grinding up. I'd probably be looking to book some profits up as close to the 200 MA as possible. That's been some resistance, maybe even into the 50 MA. If you've been in that, I guess you could trail your stop up. We're right on like the 20 MA if you want to be really careful. Could use that, but I'm hoping for a little bit more of a bounce here to the 50 and maybe even the 200 for that trade. GBTC, that's the Bitcoin. Holy cow, what happened here? There was a flash crash in Bitcoin. Why didn't I not see that? Is that real? It got the 100 MA? That's great, because that was actually my price. I should actually check my position on this. I might even be long this and not even know, because that was right where I had my buy order. I have to take a look onto that. Someone said I think it's fake. I don't know if that's real or not, but I actually was looking to get long actually down there. If you watch in my video, I talk about that area as a retest, and that would be the area. Now the algorithms probably have seen that, seen this move or whatever, and I'd probably be an interested maybe right or right out buyer there for a bounce. This has just been consolidating. I don't really have my updated, my regular updated chart here, but I'll say this: if you're long this Bitcoin, you don't really want to see it get below like 343, even 37. Like below 370 to me is a little iffy, whatever. Making up words now, right? Jesus. 370 to 365. I really need to see it above to hold that. That to me is important, and back up above the 50 MA and back up above the 20 MA, which is now for the first time in a while since the 621 bending down. So when a 20 MA is bending down, that's usually not the best sign. You want those to all kind of moving averages to be bending up. So I'll say this: you could own it in my view above the 50 MA and probably add to it above the 20. But now that we've kind of saw that little flash crash move, and I know Ethereum has been kind of acting like it's huffing paint, I'd be into maybe waiting for one of these kind of like washout type of moves. Or wait for the trend break back higher, or wait for lower. That's really my my call for that. The Zibons, also one I've been talking about a bounce play in. That's been playing out well. Today stalled on the 20. That had been a little bit of support. So I guess we could say stay with the trade as long as the 50 MA holds and maybe add to it above the 20. This doesn't really start getting into awfully tons of trouble until you start losing the 200 and the 100 MA kind of confluence area again. That to me would be a little bit more problematic. So I'm sort of maybe looking for a little bit more in the TLT, but the bounce play is kind of getting close to where I would be looking to book some profits into further strength, maybe into 25s, to 25, maybe 27s max, but I think 25s. HYG. Now I had mentioned this the other day, which many of you saw if you watched my video, or if you haven't been watching it, you'll get a little bit of a catch up now. Now HYG has been relatively strong for a while, and that's been able to afford companies like Hertz, for example, which I had talked about a bit of a stealth rally happening. And holy cow, by the way, how'd you like that move in Hertz today? Boy, we got first target today. We're going to talk about that right after this because it's relevant. companies have been able to recapitalize themselves. Crappy companies like Hertz, for example. I don't think Hertz is a zero. I think something's going to go on in there. Carl Icahn, I think, owns like 35% of the company. There's no way he's letting that thing go to be a zero. My thinking on this, though, is that if we were in like a bad economy and credit was tight, these guys wouldn't be able to refinance themselves, but they were able to refinance themselves, and that took the zero really off the table. And once that is taken off the table with the heavily shorted stock, tail risk being removed, back to the upside. Anyway, HYG came up from the bottom of the range. We're now kind of like tapping the high end of range. I'd probably be looking to lighten up here and maybe want to add back if you're looking for a long back near the 50 MA, but for the most part, I have traded this one very successfully, but for the most part, my view on HYG is that I like to kind of just watch it. It's like more of an indicator to me than a trading mechanism. Although, if you've been following me for a while, we have pulled off some almost pinpoint accurate moves of down moves, covers, recut short on the up move, and then down. This doesn't really strike my eye as problematic, particularly the fact that it's making new highs, until you start losing the 200 MA and start making lower highs and lower lows on separate legs. Just keep that in mind. The aforementioned Hertz heights. Wow, this thing was way below 10 for a while. What did this thing touch? It was down quite a ways. 852. This area, this like 750 plus area, is a first trim point. There's a reference peak at 1781, and today's high of day was 1770. So yeah, it's probably a good idea to book a little bit of the profitos. The 200 MA is coming down. It's roughly around 2025. I don't know where it'll be when it gets there, but that would be like sort of my end target point. And that was also an area of old support, like 19s and 20s. So somewhere between here and there, I think, is the time to bail. I actually booked some profits in this today. I have a little bit more on, but with a raised stop. I wouldn't give back more than half of today's range. I think it wants 20s, but I don't know that it wants 20s, if that makes sense. I sometimes think I know things, and I usually wind up knowing them. Sort of like that get rich or die trying with 50 cents. You know, when I'm wrong, I still could have been right, so I'm not really wrong, but I'm right. You know, that's a hilarious scene, by the way, with Terrence Howard, if you haven't seen that. It's almost like me when I talk about stocks. Halfway belligerent. Don't worry, couple drinks, I'll be full way belligerent. Anyway, this is the area that I think we could book some profits into, and like I said, I think it wants 20s, but I don't know that. Don't get back more than half of today's range. So raised stops on Hertz. Oil, I think, is starting to disappoint the bears, and the fact that HYG is now making new highs doesn't help with the short oil thesis, particularly the oil companies, and we're going to get to that in a moment. If you look on some of the levels that I've posted in the past, they're almost like been pretty good. You have a higher low on this leg, and now you're starting to make a mini higher high above the last swing high. So we're now having higher highs off higher lows, and we are actually above the 50 MA for the first time. That's all fine and dandy. The only problem is we have the 100 MA and the 200 MA above us, and I think that those are going to be problematic for the short term. The good news, though, is that for these oil stocks is that as long as oil kind of just hangs out and just doesn't keep going down, those dividends start looking mighty fine, as in attractive. XLE, I mentioned, held the range low. I'm not on my regular platform, so of course I don't have that level marked off perfectly, but it did hold the full pullback area that I was looking to for like the sort of the max downside that I had laid out was 61.14. That's the gap. There's like a little gap fill down there. So now that we've rallied, what's the scoop? All right, so we've seen these kind of false dawns before with these sort of leg ups, and then it stalls right on the 50 MA, and then it pulls abruptly back. yesterday looked like we were going to pull back. It held the 20, and now we had a close above the 50 MA. That is very nice. Very nice. I like you. I will say this. Above the 50 MA I think is okay. I would not, if you're in this, let this get back below the 20 MA at this point. So I think as long as it holds above the 50 MA, it will see the 100 MA, which is a couple of points higher. It's 67.70. So keep that in mind. If long this wouldn't give back more than half of today's range. Very crucial there. The one that is often the tell, and it has not been like the general that it once was, has been Exxon. It is making some higher lows, but it's also making some lower highs. So I'm a little iffy on this as long as it's below that 50 and 100 MA confluence up in 81s. It really needs to clear that to get like the range highs. So I'm keeping an eye on it. I've been playing this thing short with puts. Like I've been pretty good at selling them low and then buying them back high, and I'm just going to keep doing that until it works. That's sort of like what traders do. China, we need to take a quick look at China. That's very important, and it's been acting well. So as long as China kind of stays in an up pattern, I think that that's fine. A noticeable weakness today. One of the things that caught my eye on the sand today was weakness in BABA. Alibaba. It was relatively weak. You had a very strong market, and then BABA was looking red, right, for part of the day. So we're close to my end target point, actually. What did I have that down as? It was, what was it, 156 or 158? Let's do it on the fly here. Why not? Sorry if you saw this in my weekend video. I hate to repeat my work, but like I said, I'm on a different computer here, and this doesn't have my Fibonacci analysis on it. That's really annoying that it didn't carry over. Somebody was colluding over there, right? They're not doing things properly. Let me add in that 1.618 fib extension, and we are close. 158.81 is the 1.618 fib extension. We are pretty close. So I would be looking to book some profitos in BABA on strength. I think you could use today's low, if you'd like, as a stop. Hold on one sec. You could use, let's see, 148.29. Could either use 148.29 or today's low, whatever you want if you've been kind of trailing the stop, but I'd be looking to book some profits up into 158, so you have about $2 or so worth of gain from here. I wouldn't take any more than $2 worth of risk from here as a stop for that gain. A lot of people like to play Mr. Perfection, and they're willing to, like, you know, hold till the end. I mean, what good is it to get the last $2 if you could lose $10? Don't ever, in my view, risk more than you have as potential upside as a stop. So that's a little trade school 101, and you wonder why I'm charging the sort of not so big bucks, although some people seem to think it's big bucks. That's why, for that knowledge and expertise, if I do say so myself. IBB. Looking pretty good, actually. This is in a bull flag pattern. If you're long, you could use 308.49 as a stop. And I would actually be looking to kind of press the gas on this above 323.45. Keep that simple, stupid. We won't get into any stocks because I want to keep on going. IYT today, this is important. This was one of the things that led the rally, and today was down. And I mentioned the other day, yesterday, don't sleep on CSX. That's going to be important because that that was sort of like I don't want to say it's like the Exxon because they're not really the best of the best, but they have been a leader in the transportation indice. So today held the 20 MA. If you lose that 20 MA, I wouldn't want to be long CSX anymore. I would think that you could do a row short, either with stock or with like puts or put ratios, meaning like buy at the money puts and sell like 45s, or even I would go lower. You could do like a structure, buy ATM, meaning at the money, sell 45s, and then sell 42s because that's the 50 MA. The real breakout took place from 37. So this thing could really, this thing could have a bit of a, a bit of a tumble. When stocks can't go higher on earnings after they've had big runs, they tend to go down. So I would either, if you want to be long CSX, and I'm not saying I necessarily do or don't here, that's still to be determined, I would buy stop it with a long above today's high of day, because today is the earnings day. It's sort of like its own personal Fed day, its own private Fed day. Or I'd be looking to like wait for that pullback closer to one of the fibs. The 50% fib is down at 38.40, so you're a long way from Kansas, Toto, with this one. So I like I said, I'm a big fan of this company. It made us a good amount of money. I talked about trading this. I do think it's probably prudent to use today's low of day if you're still long it as a stop, and just revisit it lower, or buy stop it to add more. Any move up above today's high of day to me would be pretty bullish, actually, because that would be a full negation of today. One of the things I think people don't realize is that when you have problems in stocks, it always starts with the weakest hand. It's sort of Gresham's long, the weak bring down the strong. Look that up, it'll freak you out. It usually pertains to currencies, but I've elaborated a little bit. The last people who kind of buy, or when they're wrong, they're the first to bail because they don't have all the gains and they don't want to rack up the big losses. So often their selling starts the process. So always keep that in mind. Think about who's right, who's wrong. You know, when I talk about sidebar for a moment to kind of ring this home, I talk about overnight inventory, particularly like in the S&P coming in being long or short. If overnight inventory is like all long or all short, they tend to be the weak hands, and they're the first to bail. So like, let's say you have a gap up in the market and you don't take out overnight high, and then you lose the first 15-minute low, and everyone's been long, obviously, because you had a high. Those people are the first ones to bail because they don't want to lose any more of their profits. Same thing with a move down. Let's say you have a gap down, but you don't take out overnight low, and then you take the first 15-minute high where people put their stops. It's like the opening. I often say opening balance, but really opening balance is truly the first hour, but you could say opening balance range, 15 minutes, whatever. That's where they'll put the stop, and if they don't see fresh lows to reward them, they're often quick to cover. Today was an odd day in the sense that it was a trend day. You had didn't have the internals, in my view, to support a trend move. You had a 4.29 to 1 positive in the NYSE and 2.61 to 1 negative. I'm sorry, positive in the Nasdaq. By the way, if you're in the in my platform, you would put the breath bubble study, go into edit study, and put that in the Vold area, and then you'll see the breath bubbles. That area to me, was interesting. It said to me that the market was getting itself a little short. Overnight inventory I'm just looking at now was a little bit mixed. I wouldn't say it was all short, but it was definitely sort of a mixed bag. I think what had happened though last night, from the prior couple of days, you had a big run up yesterday and then again today. I just think these are a lot of shorts being disappointed. Like if you go flip into SPY for a moment, we're still in CSX. We don't want to be in CSX. How are we running on time? Not too bad, actually. Where is this? This is a weekly chart. This is not the daily. Let's go 3-year daily for now. I got the small screen, so we'll do a smaller time frame. And it's off to the wrong side. This is just like almost like driving on the wrong side in like England or something, right? I mean, Jesus Christ. 50 MA has been holding in this. I think what got this party started was the gap and hold and almost go above the 20 MA. That was a downtrend break. Remember, I had talked about that. We had talked about that area. Anything above that was a long, or below it was a short for the gap fill. So it's been the long. We've just been riding the lightning. You had a couple of days of consolidation the last 2 days, and then today up again with another gap and kind of go. There was no real excess on the high today. Let me just look in the ES is a bit of a poor high today. Today closed with a poor high. So there's no excess. So that means to me that there are here's the probability. Often, listen, we could just be in like all-on rampage mode and just keep going. But if we're going to stay to the kind of the market that we've had lately, there's sometimes a back off first from the poor high before the repair. So I would be surprised if today's high of day was sort of like the be all and end all. Technically, this is now getting a little bit, I don't want to get wonky, but if you look back at like 3-1 that day, that gap and kind of go higher, the whole day wound up being sort of excess. That could be the case today. So I don't think that's the case. I think I had said if we broke 245s, I thought we'd see 249s. So I'm still in that camp, but I'll say this. If you were to lose today's low of day, I think it would be quite a bit of a dramatic liquidation break that could even, believe it or not, take you down to as much as the 20 MA if it really got going on light volume. So because to me it would be almost akin to a look above and fail. Just keep an eye on today's range. If you're already long, I wouldn't let more than, again, half the range go back. I like to stay very consistent with those things. There is a mini gap fill there, and a retest of the breakout would be like down to 44s. So you don't really start getting in trouble, like serious trouble. I mean, listen, it's $3 lower, but you don't really start getting $2 to $3 lower. You don't really start getting into trouble until then. I will say that this, on the market, any pullbacks to the 50 MA will be buyable until they're not. I like to be simple in that regard. I got a notice today on NASDAQ that was pretty interesting. IWM today, hold on, let me zoom. This is just breaking out, right? Pretty impressive move. This has been consolidating for a while, way not overbought. This has just been chugging for a while. If you want to get serious now, the consolidation range, I don't know how you want to draw this. There's two ways to draw this. It would be from either 140.86 down to 132.40. I'm comfortable with that, actually. I'm guessing you can double that range now to the upside, and that would be your upside projection for IWM. So that's my would be my projection, doubling up that range. I'm gonna save that for the weekend review, and I'll show that in living color. Qs, I think this disappointed a lot of shorts. They were getting, I'll tell you, I got so many messages from people who were like shorting the Qs and stuff, and I said, listen, I think that I agree that it's starting to look a little troublesome, but until you take out that reference low of the 135.87 and hold it, we had to look below and fail, it's going to be hard. Now the fact that you had the look below and fail on the range, you're now back up to the top of the range. That's often what happens, and it overruns it a little bit. So is now the time to be first piling into the Q after coming up from sort of the range low to the high? Probably not. You'd probably be looking to book some profits into the move, but markets don't tend to like just become bearish right away from an all-time high. It doesn't really work that way. So my view on this is that you could probably be a buy the dipper on touches to the 20, 50 MA confluence on pullbacks for right or right out, and I wouldn't start getting really too bearish until you start losing that. That's my view. A lot of this, and I really want to stress this, is going to depend on these tech earnings. Now, we had a bit of a interesting situation here. First and foremost is Apple had this big move kind of down. Google has been strong, but got to my price target that I had mentioned, and I still think this area is probably a good idea to start maybe booking a little bit. It may want to make a new high. It sort of has that look, but I think it's prudent to do it. Netflix. I'm just going to talk about that. Netflix started off this, and we're going to get back to Apple. We're not done with that. It started off this sort of tech move, and I think a lot of these stocks are rallying now on the back of Netflix into their earnings. So the problem for that becomes is do they make the move prematurely, and then is it sell the news? Like everyone chased now on Netflix, and will they wind up either being sell the news or pop and flops once everyone's in? The answer is going to tell us when I do my surveys. I do polls on these stocks, And if everyone is sort of already long and such, then we know that it's either going to be a pop and flop or likely a pullback. I had mentioned in real time, first of all, I mentioned in my weekend video that I thought the move in Netflix would be up. That has been correct. I then did a public tweet that I said if it cleared the earnings, the after hours high of day, let me see, this is, I think it was 179, hold on, one day, 15 minute. 179.45, the next price would be 186.59. Happened. I wish they were all this easy, frankly. They aren't, but this one was. That is the 1.618 Fibonacci extension of the consolidation range. It actually overshot it a little, 187.17. I assure you, I'm not the only technician who saw this, and there will be likely some profit taking. If we can clear that high, though, the next level of resistance would be, I'm sorry, that was the 2 times range, not the 1.618. The 1.618 was 166.22, where we hit, marked time, pulled back. Now we got the 2 times range, and now it's pulling back. So I'm sorry, it was the 2 times range we hit, that 186.59, not the 1.618. The next big level of technical resistance or upside target, and I'm really loath to say this because I would like to see this consolidated. I want people to just say, oh, Justin thinks it's going to 219.54, and then they are like, oh, you know, we have to pile in here. Let's give it a couple days. Just see if this thing can hold this level. If you can clear like the last 2-day highs, I would say that could be in play, the 219.54. Believe it or not, that's not totally out of the question. We are not overbought stochastically. There is still room for this thing to continue running. But if I were first initiating, like let's say I didn't have a position in this, and by the way, you should be booking some profits at those 186s, and it's still not too late here in my view. Wait for the 15-minute 200 MA. In the after hours, when Netflix first reported, it stopped right there. That will now likely be the support. It's currently 175.08, so wherever that is a buy the dip area for a right or right out bounce play if it does wind up coming down. Apple, the aforementioned Apple. I now have been booking some profits into this move. I had been short puts. I was actually, believe it or not, didn't even have the best trade location when I sold these. I was not thrilled that it came down, but I knew based on my experience with Apple that it wouldn't just completely fall out about it. It would chop for a little while and there'd be some rally attempts. And that gamble, that calculated gamble based on my experience, not just an outright gamble, wound up working. It's now above the 50 MA, which is good, but we're right at the 61.8 fib retracement of the decline, 51.13. So my take on that is this. If you're still long Apple, I think you could use today's low of day as a stop. If you want to swing for the move higher, where the primary downtrend comes in at about 154.62, if that were like 150, mid 154s. So if you can keep above today's high of day, that would be my target. If you lose the low today, I would think that this could pull back to maybe as much as like 147s. If it were to lose low of day and then lose the 50 MA, I would assume that the first pullback would be from one fib to the next to 149.43, and then possibly to the 147 and maybe wherever the 100 MA is at that point, because that has been some key support. That 100 MA confluence down there. So I like the idea of booking some Apple here. If you're already long, book some, trail the stop. I think you could use today's low of day as a stop. If you're looking, I don't know if I'd add here, but I would say that you could potentially see up to the 154s. Now, if you're already long, I'm going to give you a quick little share repair strategy. By the way, this is stuff that's going to be discussed in premium service. Hint, hint, this is a little bit of a preview for what's to come. If you have shares, what you might want to do is near dated. Let's say for every 100 shares you own, You buy a call, either out of the money or at the money, and then you sell 2 times out of the money at the resistance. Near dated, you don't want to be stuck in these things if it rushes up quick, because then you'll wind up losing money on the, sometimes, I'll tell you, I've had that happen before. What I'll often do is take the loss on, and it's not usually even a big loss because you are long the call and you're long the stock and you're just short the 2 times calls. So you could take some of the loss on the 2 times calls, make the profit on the 1 time call, and then sell the stock. If you're looking for share enhancement short term, or if you're a longer term investor, you could buy short term at the money or just out of the money calls and then sell 2 times higher. You make the money on the call spread that you're long because you're short, let's say you're short the 2 times calls, you have the 1 time, so that's technically a call spread, and then the extra overwrite of the call is covered by your shares, so you would have really no risk of it overshooting and then you being short in the hole, so to speak. That to me would be a great strategy here on Apple. My thinking for earnings here is that the more it runs up, the more that I think it's going to get a pullback. So what I'm thinking here is that if it keeps running into earnings, we could set up for a pullback short for the trade. I'll discuss that in detail in one of my weekend videos before Apple. The ideal scenario, of course, is this run up here, then like a day or 2 down big that negates like a lot of the days, and then we're set up for our, drum roll please, shake it before you bake it earnings play, meaning that it shakes out all the weak lands, everyone either pukes out of their longs or gets short, and then it rips up in their face nicely. The caveat is that this quarter is not well known for being great for Apple. I would actually love Apple to be down on this quarter, nice and chunky, so this could set up for a longer play for the iPhone 8 release coming out. That's why I think any pullback in this will be met with buyers. So the risk here to me to the downside is probably minimal and maybe not even that long lasting. So we'll get into that though. I have some specific levels that I'll be looking at, and we'll get into that when I get there. Let's flip back to what you guys want to talk about, because I've been talking a little bit about what I want to be talking about. Although I think we've been walking the balance there a little bit. Let's take it from the top, shall we? Square. Square is good. It's not better than PayPal, but it is pretty damn good. It's looking like it's run a hell of a lot to me. I would say I'd be into buying a dip in this. As long as the 20 MA holds, it's sort of okay. I would think that there will be a buy the dip opportunity in this a little bit lower. Like, what I have to ask myself here is, do I have great trade location? From the last gap up, when they gapped up 2 earnings ago, they've now gapped up for 2 straight earnings quarters. The stock was at 15 bucks. It's now at 26 and change. Do you have great trading location here now that it's run over 10 bucks? Probably not as good. So maybe this gets a bit of a pullback is my thinking, considering you now have 2 gap ups on earnings. I'd like to see this pull back before the earnings, and then I would want to set up long. It's August 2nd, so let's keep an eye on that one. Might be of interest. I actually have some short puts in that that I put on a while back. They're probably really worn down. I should probably be looking to book those. PayPal, same situation. I had said that this to me, everyone was like, early in the year, I always get asked questions by people. What do you think is going to be the like one of your favorite stocks for the year, or what's the most likely to be taken over? And I had, when there was, I forget what was going on, there was some kind of takeover at the time, and I was like, listen, you want to speculate on a stock that can maybe be taken over, just buy some PayPal. There was no takeover, but the stock is up huge. The stock was like in the 40s at the time, even testing into the 30s. They're up like 20, almost 20 points. And people are complaining about me charging a couple of bucks, right, for a video. You got these massive winners. I would like the idea of booking some profits here a little bit. I had said a little at 55. If you want to use a stop now, I wouldn't let this thing get back below 56.80. If you start losing that, I think you might see 55s again and maybe down to the 50 MA. 50 MA has been support, so I'll say it's a buy the dip until it's not. And if this were to somehow get itself down to the 100 MA, which is close to where that like sort of like gap range was, either on or after earnings, just sell the puts down there. I will be totally DTF for that. Down to fill for that. That would be great. I just added that in on my own, although we covered Square. Let's go through this. AT&T. That has not been acting well. T-Mobile, I think, has been kind of drinking their milkshake. And I think there's a lot of anxiety with the Time Warner deal. T down here is at, I believe, the 61.8 of the range and near some reference support. I think the yield is pretty big up here at this point, too. Let me, I think it's over, yeah, it's almost 6%. So I would say you could probably start selling some puts in this down here. I don't have my full fib analysis, but let me circle that. I'll add that to the weekend video. I want to, that's one that really does have my eye, particularly for IRA buys. I think I have some small short puts in that, but I need to take a look what the story is with that. It's almost like such a nothing position. It's one I'm like still debating if I even have on, which I do, as it turns out. Someone asked about this Vertex. I'm assuming there's news on that. Was this up on earnings? Not yet. It ran a lot. This must have news. It's not one I'm really that familiar with. Sometimes you don't have edges on things. I would be interesting. This gapped up the last time ahead of the number. And then it wound up being just stagnant for a while. This thing is probably going to chop for a while. Any pullback on this, you probably could sell some like sub 138 puts, I'm guessing. I doubt that this thing just ran like this because it's going to come back down so fast. So I think it's going to be choppy for a while. I wouldn't really chase this, but maybe if you want to sell some puts into weakness, it might be okay. Caterpillar has a little bit of excess on that 110 high. It's holding the 20 MA. What was the key moving average in this one? Let me look back. The 50 looks like when it had the gap, it was above the 50, and then it was below it, and it was resistance, and yeah, so the 50 MA is key. It's right on the 20, so if you lose yesterday's low, I think you could have a quick short down to the 50 MA, where I would probably look to cover some. If you lose the 50, then the 100 would be in play, down at 100. This one does, I don't remember, how does this one tend to act on earnings? This one gapped up on earnings, and then they sold the bejesus out of it, right? So my guess is this could be a history repeating. Gaps tend to move in like bunches. Although this was the second gap. So I was going to say if that was the first gap, I'd say it would gap again. I don't know. I'd be booking a little profits in CAT. I think maybe a little profits in CAT at this point. It's run a lot. Valet, or Vale, whatever this is, V-A-L-E. Not one I follow that often. There could be a little bit more room, maybe, to like 989, maybe. That area looks like it would be some resistance. Probably be looking to book some profits on into some strength on this one. This had a head and shoulders top. It came down to reference lows. Now it's, you know what? What are we screwing around for with this? Let's just throw a Fibbo on this bad boy and just do it, right? What are we guessing, right? No guessing here. 1170. Let's change that. What was the low? 747? Like the airplane? No, like the stock, silly. Alright. We're gonna end soon, by the way. Getting up there on time. The 50% fib is 959. I'm sorry, yeah, 959. And the 61.8, where there was a lot of resistance, was 10.08. So maybe you hold this to $10. I'm guessing that would be where, if I were long this, I'm not, I'd be looking to sell it at 10. That just is the number, right? That's just how traders think. I already talked about Bitcoin. XLE, I already talked about that. AAOI, also one that I talked about in the weekend review. Oh, this is so annoying. I had a really, really nice workup on this stock, and naturally it doesn't want to show in my new charts because it didn't have it. Let's see. If you didn't catch AAOI, since we're running a little short on time, why don't you check it out in the weekend review video? I want to leave a little bit to the imagination as well. I know that's one that's heavily interested in as well. I'll say this though, it's run a lot. I would be looking to probably book some profits between here and $100, but there are some important levels that you probably want to look at that are in my weekend video, so check that out. We were bullish on that. That's another one, by the way, that we were bullish on for a move up, but we're talking about taking profits into the pop. Lululemon is chopping. It's making some lower lows and some lower highs. Enjoys long walks on the beach and see-through yoga pants and all kinds of lovely things. It's a bit of a higher low on the total leg, though. This is wait for it. 81.81. It's right on the 50 MA and the 38.2. So if you're already long, I think you should maybe book a little here and use the 200 MA as your stop for the balance. And then I'd be looking to kind of clear out of the balance of this somewhere between the 50% fib and the 61.8, which is like 64.54 to 68.61. I think the halfback, yeah, the 50% fib, that is right where after the initial move down and there was a bit of a stutter step, then on the last leg up there was like that's it, 64.54. That's where I'd be looking to kind of bail out of this, and maybe if you're a long-term holder, you would sell 68 plus calls to bring in that premium, because if you get taken out there, it's fine, and if it has a pullback, at least you have that premium as a buffer. We'll end on burritos. Dirty, stinking burritos from Chipotle, who is not as good as they used to be, by the way. I used to argue with my friend, you guys probably know her, Montana. I used to always tell her I was a big Chipotle fan, and then she knew if I ate there for lunch, it was in time to be short. Oddly, whenever I eat there for lunch, the stock seems to go higher. Very odd. I don't know what that's about, but I don't know if I'll be eating there anytime soon, though. This is close to the reference low, which is 352.96. Now, I will say this. They do report on 7/25. So here's my scoop on Chipotle. I have a rule. I don't trade Chipotle earnings. I once did a strangle on Chipotle, meaning I sold some out-of-the-money calls and some out-of-the-money puts, and the stock had like $130 gap down, and it cost me about 18 grand. Very expensive vacation. No use crying over spilt milk, though, but I don't mess around with Chipotle earnings. You have tweezers on the low today. I know this is going to sound nuts, and I'm sure I'm going to live to regret this, but I'd probably, if I had a gun to my head with this, I'd probably think that the gap down would be minimal. Maybe sell some out-of-the-money puts in this. It's just down a lot already in a straight line. That's how I would play it. If you want to really limit your downside, maybe do a call spread, and I would do longer dated. You could probably even structure this in a way where you would, let's say you went into, let me go into Chipotle for a minute. I can't even believe I'm talking about Chipotle earnings, because this is just something I just don't do. Oh God, the humanity. All right, so we have a few days until then. So what I would do if I were you, the person who wants to play Chipotle, I would go in and I'd look where the big OI is, meaning the open interest, and I would sell that strike, call, and then I'd buy a longer dated call at either the same strike or further out of the money to take advantage of the IV crush. So that would be probably my play. Basically, all of these plays are basically playing for IV crushes. So the expected move in Chipotle is, when do they report? Next week. It's 26 bucks basically for the next. So I would go 2 times or 2.5 standard deviations out of the money and then sell those puts if I were looking to do it. Again, I don't want to do this and I will not be doing this. I would rather pay up on the stock if they report earnings and the stock goes up and it's a successful hold of the low end of range. It will be buyable probably back to the midpoint of the range, where would be, let's draw that in. If it doesn't all happen right away, you'd probably get a move. This is a heavily shorted stock. Hold on, high was $4.99. See, by the way, when Chipotle topped out at $4.99, a lot of this decline, I bet you, are people who wanted to sell 500 and who were being stupid and holding on, and then are, you know, puking the stock. Hey, I thought it was going to 500. They were being cute for $1. That's what I mean with Priceline, by the way. 430. Where did this really break down from? Because that's where it would go if the move is up. If the move is down, by the way, I mean, God help you. I mean, this thing is down so much. I actually, if the move is down, and this is how I'll play it, how I will actually play it. If the move actually is down, I'll look to sell puts then, like, because it'll have been down so much already and it's so heavily shorted. There'll probably be a trade on over the opening 5-minute high of day for either a stock bounce or sometime in the next following couple of days, maybe even the same day, to sell out of the money puts. That's how this bad boy will be playing it. If you want short term, above 380, you could try long. Below 362, 62, you could try short. So that's my that's my take on Chipotle. So I hope that helped. Anyway, thanks for sticking with me. If you're not subscribing to my premium member YouTube channel, do so. You'll get more of this type of analysis. You're not going to get this on television, I'll tell you that much. That channel, the link to that channel is going to be, if you go into my Twitter profile, @JustinPulitzer, there is a link there. You can click on it, you'll get right in, and there's an easy sign up that'll walk you right through it. Thanks for sticking with me. I hope you enjoyed my video. If you came into this one late, it will be rebroadcast on my YouTube channel shortly for free. Have a great rest of your week. I will see you on Sunday, possibly even Saturday, with my weekend video. Cheers.